Roddy?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. All right, Superintendent, if you'll do the official roll call.
Mr. Badgeron?
Present.
Mr. Edmond? Mr. Hidalgo?
Here.
And we also have Mr. David Lejeune, who is not on the committee, but is sitting in because he just wants to learn more about the insurance. So we do have a quorum, Mr. Hidalgo.
Thank you. All right, at this time, we'll go into information items. Item 2.1, property and casualty insurance renewal update for 2025-26 fiscal year. Is that going to be you starting it off, Ms. Gardner? Or Nick?
Can we put it up?
Oh, it's nice not having a timer this time.
Will y'all be opening the attachment, Mr. Perez? Okay, thank you. So we were asked to go ahead and provide a list of property and casualty, our different policies, and when they were expiring and when they were increasing. As we know that we have had a soft market right now, and so as you can see for property, it's about a 10.39% increase all the way down. We do carry a large variety of policies to cover the different areas we need in the district. As you scroll down, so we can see towards the bottom, you can see that student accidents was a significant increase at 14.3%. Overall, because of the soft market, our casualties up about 9%, but overall we'd be down about 2.35%. I can say, Mr. Jeffers, I asked him earlier to go back historically and see 3 years what our increases have been to the general fund budget for our property and casualty. He's finding it for me at this time. In what year? In 24-25, we went up $719,000. So from the previous fiscal year. So for the current year that we're in, for fiscal 25, we had to increase by $750-something thousand. I do know that Mr. Tyler Smith is in the audience from Alliant if there is any questions.
Yeah, there's going to be, I'm sure, quite a few questions, but a question for you. You said we had an increase of over 700,000 over last fiscal year. Did that include any plan changes whatsoever? Did that include
Change in deductibles and things like that?
yes?
From what I am aware of, no. That it's been the same policy rolling, but again, it could be in detail that Mr. Smith might know a little bit different.
Okay.
Yes, I can speak to that if you'd like.
Yes.
So last year, on the property in particular, we increased your named windstorm deductible or your named windstorm limit, which is hurricane, from 25 million to 50 million. And we also increased your policy limit from 50 million to 100 million.
Okay, so we had an increase in premium, but we didn't have an apples to apples policy.
No,
All right,
and we looked at different options. It was discussed with the risk management team based on price and what made sense based on the modeling, that sort of stuff. And let me think. Oh, and also premium is calculated as rate times value. The values also increased last year as well, so that contributed to some of the premium increase.
Okay. This is an informational item. Committee members, if you guys have anything that you want to say or ask, please do, but keep in mind that the very next item Let me make sure it's the very next item. One item coming up very soon is going to be a more conversation and a vote on this. But if you have any questions or any comments for either the broker or the team, please do so now on Mrs.
Mr.
Gardner's
Smith, I
report.
think maybe, since you talked about, does this quote up here, or the cost for the 26 fiscal year, is this gonna include insuring the new Lafayette High at the value and, those items?
Yes.
Okay.
Looks like we're going from 1 million to 2 million property limit. And it looks like we're going from 1 million to 500,000 on deductible.
That agenda item, I think, is incorrectly stated. You're going from 100 million
100
property
million.
limit to 200
Well, of
million
course.
in property limit.
Yeah.
And we're also reducing the deductible, all of the perils deductible, AOP that's up there, from 1 million to 500,000. All for just, in fact, these numbers, we have some revised ones. They've gone down a little bit more since, but it's effectively a 21% rate decrease. If we had used the same values as last year, like if none of the schedule had changed, it'd be almost $700,000 in savings.
Okay, can you pull your mic closer to you? So, of course, we changed the values because we had to. I mean, we have some,
Right.
at least one of our buildings is way over that value. So we had to change the value on that, and we decreased our deductible from 1 million to 500,000. And did I hear you correctly that if we had not changed anything, you would have brought back a proposal that would have equaled about a $700,000 savings?
Yes, sir.
Well, help me understand then, Ms. Gardner just mentioned that last year's renewal over the previous year was an increase of 700,000. Can you help me understand that? Because it just sounds, I don't know if it's a coincidence or not, but
It's not a
maybe you can help
coincidence.
me understand.
So this year, and y'all alluded to it, and I'm speaking mostly in the terms of the property, right? The property market, not the casualty market. The casualty market has not softened. In fact, it has gotten harder. The property market has softened. So last year, you were still in the throes of that hardening property market, so rates were still going up. We also, values increased, we increased limits, all of that. So that's where all that cost came from last year. This year, the market softened. We were actually able to secure that $500,000 deductible for no additional premium, because the markets that you work with that are on your program already really, really wanted to stay on the program. Because what's happened in this first half of the year with this softening market, all of these property carriers are not hitting their objectives. They're not hitting their growth goals, like as companies. And so we went out to new markets, admitted markets, everyone else, and those carriers are trying to claw back some of those losses from their current programs. So all of their premiums came in way higher than what you have today. So we were able to leverage those incumbent markets against each other and just continually drive the price down, get the terms increased for the results that you see here.
Did you go out to market last year, or did we just accept a renewal offer from
We
the
go out to
company we
market
were
every
with?
year. Every year.
So you went out to market last year,
Yes, sir.
and you went out to market again this year?
Yes, sir.
Committee members, any comments or questions related to the renewal? So we talked about shoulda, coulda, but let's talk about the reality. We changed some things, so where are we falling on savings, premium savings, this year with the changes made?
So with all changes made across all lines, including casualty, as you see up here, we're going to be right at I'm sorry, I had it here a second ago, $207,000 of savings from year over year.
Okay. Yes.
So this is a question for finance, so Matt or Anthony. In the proposed budget, we had put a potential increase of about 800,000, give or take. So can you explain how this process is going to go if we're looking at a $240,000 savings, or $207,000 savings, sorry?
So when we compared some of the renewal quotes we got initially to some of the budgets, because in the budget process, which starts in January, we weren't aware of how soft the market would be. So we normally projected what we've seen in the past. So in the budget, we're probably looking at a $500,000 to $800,000 savings once we get all the premiums paid. So that's probably where we're going to end up.
Will that be reflected in the adoption we're going to do next week, or are we going to have to change that in July?
We'll change it in July or subsequent once we get everything paid, because Desiree's not here today, but she warned me that there was some kind of, she said some kind of taxes that we're going to have to add on to this or something. She was, we want to make sure all the checks are cleared before we adjust the budget.
Okay, perfect, thanks.
You
And
good?
I'm happy to speak a little bit to that as well, is that in December, when we were requested for projections, what Matt and his team effectively did, we gave them the, worst case would be flat rate. But we knew that the values were going up 10%, something like that. They turned out to go up 12, almost 12 and a half. So that's where the budget increase projection came from at that time. Now, most carriers renew all of their reinsurance, their treaties and everything, January 1st and April 1st are the two big dates for that. So once that occurred, those costs go down, and that's when the market really started to plummet.
So when you gave your projections, were they based on any data you got back from insurance companies, or they were just based on what you do in your profession and you knew values were going to go up? So you just figured, okay, well, look, I can't do your job. I don't know how to do your job. I'm not going to tell you how to do your job, but I would maybe say, moving forward, you may want to be a little more careful because, we as a government entity and all businesses set a budget every year.
Right.
But we need to be able to budget on a little bit more actuarial and factual data, more so than maybe last year's statistic, because look what happened to us this year. I mean, we've been throwing numbers around, and now we're talking millions of dollars. It's not, it's not a $20,000 issue. So you do what you do. I guess if I had advice for anyone sitting in that seat, it would be, don't come with a flat or a percentage projection when we haven't had conversations with insurance companies and, then gotten more steady data.
We do, in the course of our job, we have conversations with insurance companies constantly. So those projections were based on what we were seeing in the market from those same insurance companies, mainly across K through 12, public entity type business and coastal region business. So,
Okay. If there are no other questions or comments from the committee, that's an information item. No action is required or necessary, but I'll ask you to stay where you are because we have two items. We're going to have some questions. All right, we'll go to our regular agenda. Item 3.1, review and approval of the Board Insurance and Finance Committee meeting minutes from the May 6th meeting. I'll accept a motion to approve those.
Mr. Hidalgo, I'll put a motion on the floor to accept last month's minutes.
I'll second.
All right, we have a motion and a second to accept the minutes from the May 6th Board and Finance Committee meeting. Do we have any public comment on accepting these minutes? Any committee member comments? Hearing none. Ms. Secretary, please call the roll or go to vote.
Mr. Edmond? Mr. Bergeron?
Yes.
Mr. Hidalgo?
Yes.
3 for, none against.
Motion carries. Item 3.2. This item is discussion and our action regarding casualty and property insurance brokerage services. I think, fellow committee members, you remember well our last board meeting, we had this discussion to punt this conversation to our committee. Right now, we have a recommended action that the Insurance Finance Committee recommend to the full board for staff to create a timeline and qualifications for the property and casualty insurance brokerage services for the issuance of a request for qualifications process. For the sake of conversation, we're going to need a motion to discuss this item, a motion and a second. That doesn't mean that it's going to maintain in its posture before it's over with, but we do need a motion and a second to start the discussion.
So I recommend that the Insurance Finance Committee recommend to the full board for staff to create a timeline and qualifications for casualty and property insurance brokerage services for the issuance of a request for qualifications RFQ process.
Second.
All right, we have a motion and a second. I guess what I'd like to do before we go to public comment is kind of set the stage of what the intent of this is for, if that's okay with the committee. And I'm so sorry, would you please remind me of your name?
Tyler Smith.
Mr. Smith. We're going to go with Mr. Smith, not Tyler. Mr. Smith, I'm going to have several questions for you about how this process works with your organization because you're our current broker. So I'm going to ask you some questions, and maybe the committee will ask you some questions. But as you know, I think you guys came on board as our brokerage firm in 2021, if I'm not mistaken. That was through an RFP process, request for proposal. Yes, they very.
I believe it was RFQ, but I couldn't be certain.
I think it was RFP, but that's
Okay.
neither here nor there. You went through a process.
Yes.
And you were chosen, and you've been our broker for that time. I have not had any experience working with you at all. The first time I met you was at the board meeting a few weeks ago. So this is more of a standard operating procedure, this agenda item. This is something that we, as a school system across the board, whether it's brokerage services, PNC, or anything else, we need to be staying on top of the competitive market out there. And, you know, we also want to give everybody a chance to give us the best bang for our buck, right? I'm going to have some questions that are aligned with how the process works. We currently retain you through a contract. We pay you a fee to broker our property and casualty insurance. You're not the insurance company. We're not paying you a premium. You're not insuring us. You are the broker. You are our representative who goes out and brokers that. First set of questions I have for you is, we pay you, your organization, on a contract basis, right? We pay you a monthly
Correct.
fee. Is that correct?
It's an annual fee.
Annual
yes.
fee. For that fee, do you or your company receive any commissions from any insurance company that you recommend and ultimately place us with?
No, unless it's a line of coverage that was not in the original contract. So, for example, in this case, student accident and professional liability, I believe we collect some commission on that. But as far as your big ones, your GL, your property, boiler, machinery, all that, no, we don't.
Okay. How does that work? Do we see a savings in our premiums because no commissions are being paid out, or how does that work?
So, let me think about. Best way to put that is, we can negotiate commissions. So when you go and place insurance, you can go direct to markets, and then there's certain markets that you can't access unless you're what's called a wholesale broker, and those are a third-party intermediary. Similarly, because we are licensed in the United States, we can't directly access, say, London or Bermuda or German or Asian markets. So we have to go to a third-party intermediary that does that. A lot of brokerage firms own their own intermediaries that then can collect commissions on the back end, and that's considered global revenue as part of an account. At Alliant, we don't. So we can actually negotiate with different independent brokerages across the world, even in the United States, to access those particular markets. Now, in that negotiation, we can negotiate the commission rates that are on those as well, and we do not receive kickback from that. We don't get a portion of that commission. So when premiums are paid, the commissions are actually paid back by the insurance company that charges the invoice. So that's how that works. So you don't get a separate line item bill for commissions, right? It's built into the premiums. So when you ask about, does it lower our cost, it can if you negotiate down commissions. However, in most cases, it actually increases your cost because, like, for example, our fee is representative of about 2.5% roughly of the commissions on property, so, or of the premium on property. So if you were to be in a normal commission-based market, a retail broker would collect anywhere from 5 to 15% commission. So we're already technically underneath that percentage by being on a fee. The other thing that a fee does is, like I said, I don't get any more money when your premiums go up on your big ticket items. So I have no incentive for your premiums to go up. I have an incentive to keep them down as much as I can. So those are kind of the two differences between a fee and a commission-based compensation.
I understand that, I guess, and maybe you answered my question and I didn't catch it. From an insurance company's perspective, who you negotiate with on our behalf, if the premium that they are going to charge us based on the coverages that we need does not include paying anyone a commission, does that mean that our premiums are lower?
Yes.
Okay, so right now, you claim that your company does not receive any commission on all the lines except for the student line. Therefore, the premiums that you've brought back to us to approve and move forward with do not include a commission that
They-
would be paid to anyone.
If it was acquired through one of those third-party wholesale partners, then there will be a commission included for that piece of it, but not for Alliant.
Okay. I'm trying to streamline all of this for us. Okay. I hate to put you on the spot, but I'm going to. How much money do we pay your company every year to broker our broker services?
From the fee standpoint,
Yes.
or from the free?
No, how much do we pay your company? I don't care what it's called.
I think our contract for this current year is $128,000 with a certain percentage increase each year.
But what I think.
That's what our contract, that does not include whatever he's saying about for commissions.
You want everything.
You know, I'd
Yes.
like everything because this exercise is coming from the idea that, you know, with all due respect to you, your company, and everyone in this business, I respect what you do, but I don't know why we're paying people $100 and something thousand a year to go once a year and maybe have a few meetings throughout the year and contract services for us, and then we paying $5.5 million, whatever it is, $3 to $5 million worth of premiums. And we don't know who might be collecting commissions on the back end. I mean, I have gotten on this kick. Some of my friends in the crowd are going to appreciate what I'm about to say. I've gotten on this direct negotiation kick here lately. And I'm not suggesting I want to go directly negotiate, but I just I feel like we're just taking industry standard, and I'm going the opposite direction. So this item on this agenda kind of is to mitigate some of that moving forward. And the request for qualification process would be not to kick anyone out, but it's to follow a process we should be following at least how long was our contract for?
I believe it was for 4 years or 5 years.
Okay.
Like, we're coming up on the end of it.
We're coming up on it.
Yeah, I think it was for 5 years. The RFP was done in 2021.
Okay, well, but there you go, perfect timing. So I think that whether 5 years is too long or not, we need to be doing this on a regular basis, so we'll call this perfect timing. I don't think we need to go through an RFP process. I think that is extremely intense for what we're looking to do. And frankly, I don't know if fellow committee members, and we still got to get the public comment, but I don't know if we actually take action on this item today, in my opinion, because I think there's still a lot that needs to be looked at as it relates to what do we want, what service do we want, how do we want to handle this type of process moving forward, right? And I know I don't have enough information as of right now. I'm getting to ask these questions for the first time, but I think this starts the conversation. I don't think we need to rush it. We have a renewal. We need insurance. We're going to have to sign that renewal. We can't go without insurance. But even though we sign that renewal, it doesn't stop us from going through a process of, you know, competitively bidding out what we and how we want to do our property and casualty moving forward, and making necessary changes through the term of the insurance contract. I mean, if you decide today you want to go shop insurance and you find a better deal, what do? You take the better deal, you cancel what you have, and move on. So I made it clear at the last meeting that we did not want restrictive contracts. So I'm hopeful that your proposal is not restrictive in that if we sign with the insurance company and the proposal that you brought us, that we're stuck in for the entire year. If that is the case, then that's a conversation we need to have before we re-sign that.
But I think there is, and I think that we are subjected to, after a certain time period, that half of that premium is, of that 128, is we have to pay that regardless. If you cancel 3 months down and you go with someone else, you're paying half of that premium. I think
I'm talking about the insurance premium. I'm not talking about their brokerage fee.
the brokerage fee, but
Oh,
but
that's
I
a
don't
different
think it has anything to do with insurance. It's-
I'm sorry, what was the question?
If we signed the proposal that he brought forth for the insurance company or companies, I don't even know, it's right here. If we moved forward with that renewal, and that renewal would be for 1 year, right?
Right.
And we decided in 3 months that we have gone through an RFQ process, and it doesn't matter who is chosen. We're gonna go back out to market to shop this insurance. Are we able to cancel this policy and go with another policy if we so choose to do that? Because at the last meeting, I made it clear I wanted it to be non-restrictive. So you came back with a proposal. We're gonna have time for public comment in a little bit.
I don't have the answers to the policy itself. I only know the terms for the consultant.
Okay, can you answer that?
So you can cancel your policy anytime. I believe what you're getting at is what's called minimum earned premium.
That's correct.
Right. So there is minimum earned premium on the policy because y'all are a coastal exposure, and I'm speaking for property. I would have to get back to you on the details on the casualty piece.
Okay.
But as far as the property piece is concerned, there is minimum earned premium because you're a coastal exposure that renews in the middle of windstorm season. So carriers, because they deploy their capacity for that period of time, if you cancel that capacity, they can't redeploy it. So they charge basically for the windstorm season. So if you were renewing, say, January 1 instead of 7/1, then there may not be a minimum earned premium on that, as long as you canceled before windstorm season, right?
Got it.
So there is minimum earned premium on the policies that would be effective 7/1.
Okay.
Yes.
Committee members, do you guys have any questions, or do we want to go ahead? Public comment? Okay. So at this time, we have a motion on the floor that the Insurance and Finance Committee recommend to the full board for staff to create a timeline and qualifications for property and casualty insurance brokerage services for the issuance of a request for qualifications process. So if you would like to speak for or against that particular motion, please come up to the podium. If you just want to step aside for a minute.
Good afternoon.
Good afternoon. So I know who you are, but please, for the record, anyone comes up, please tell us who you are, who you're with, and you have 3 minutes. Go.
Sure. My name is Brent Romero with Arthur Gallagher Risk Management Services. I'm for the RFQ process. I think that's a good idea to do this. So I want to give the Insurance Committee some background knowledge on the meeting from a couple of weeks ago. In the news media, the conversation was ongoing about tough financial times for the insurance and for LPSS. Financially, insurance costs was going up, such and such, such, such. It was a major factor. I reached out to Superintendent Tuchek and see if we could help and review your current property casualty program. He allowed us to do a thorough review of your program and provided the necessary documentation for us to evaluate, and we found major issues we could improve your program. So y'all were talking about $600,000, $700,000 just here recently with the other agent up here. We confirmed with carriers and underwriters and recommended to LPSS leadership team several of our findings. So as you looked on that document that was up a second ago, there were several items on there at the meeting 2 weeks ago that was up, I think it was the 15th, or the date was the 15th, where there were several items up there. And the comment that was made that evening that there was a 1.5% increase. Today, we're talking about a 2.3%, I think the bottom number, 2.5% decrease. So some findings happened there, and I want to talk about a couple of different things. The property is one of major significance, because with that being stated, the market is softening. And to your point, Mr. Hidalgo, about the January timeframe, whenever that occurred, there should have been some discussion, because this has not been just ongoing since January. This is prior to that, where this market was starting to soften. We knew about this in November timeframe, such and such. With that being stated, on the current policy, you asked about shopping and renewals, right? As we looked at the last year's policies, 10 of the 30 policies, so you have 30 policies in your whole submission here, and less than 10 were automatically new policies. It was a lot less than that. So let's review. 2 weeks ago, it had a 1.5% increase, about $75,000 increase, and there was a 2.5 overall premium decrease. So what I'd like to say is currently you have over $12 million in claims, open claims, and we would work to get these claims closed. If Gallagher comes in with services, all these services are free. We'd also bring in risk management services that would help you reduce your costs there as well, and that's all a part of the package. We don't do any charges for any of this. So this is not a sales job, as it was alluded to on the front end. This is, we know our business. We're the experts. We understand this industry. You have 50 years of experience locally. If you have a bad roofer, why would you continue to hire a bad roofer if it's leaking? Hire somebody new that's going to take care of things.
Thank you. Public comment, yes, ma'am.
Hi, my name is Marion Laughlin, and thank you again for allowing me to comment today. I guess I want to go back to our last meeting where Brent brought up the 1% increase. You know, Gallagher is always proactive in securing better terms. We don't want you to have to tell us to do that. We want to be proactive for the school board. The second thing we talked about, your agent talked about, is the market just started softening. Last year in April, I delivered a 4.5 decrease to an insured that had a $40 billion claim 2 years before. So it started softening prior to this. It's a matter of doing your homework. You also asked, Jeremy, you asked about if there was anything that would stop you from moving coverage. Your excess liability package, which includes your liability, your auto liability, some excess coverage, that policy has 100% minimum earned. So that means if you decide to move it, you lose 100% of that premium. So you are locked into that policy. Now, we haven't reviewed all of the new quotes that you have, but as per what we reviewed, you would be locked in 100% for that line, okay? I do support the RFQ process. I think LPSS deserves that. Our students, our teachers, all of you deserve that. But after reviewing what your agent provided here, I'd like you to question him. I'd ask you to question him. What markets has he approached on your behalf? Was LPSS given the carrier responses? For example, if the carriers are declining, why are they declining? What recommendations has your agent discussed with you to improve the market status for next year on the market findings? Did he suggest loss control, any preventive measures? The excess is up. We need details on why is it up. Is it because of losses? Is it because of the budget? Is it because of student count? We need those facts so that you guys have that and we can work towards making that program better. On the property, it shows that all other peril deductible changed from $1 million to $500K. What about the named storm deductible? Was that reduced also? And these are just a few concerns, and Gallagher really wants to work with you guys. We do have some RFQs. We have several examples that we give our clients. We do these all the time, we would be willing to provide some of those sample RFQs. That way you could choose the information you'd want, whoever you select to provide. Thank you.
Thank you. Is there any other public comment? Did you have anything?
Are we done? We're done with public comment?
We are. We have no other public.
All right.
Excuse me, who? Oh. Well, okay, go ahead.
Tyler Smith. I also support the RFQ process. I think it's a good idea. Every public entity should do it. Those are my comments.
Thank you. Sorry, you are still the public. Go ahead.
So I agree, like RFQ process, we should definitely go through one, especially with the fact that we haven't gone through one since 2021. I think it's high time. The only concern I have is if we delay the RFQ process, how long does it normally, I mean, we haven't gone through one, but like, do we have an estimate of how long it would take us to go through this? Because we want to have, if, let's say a new person comes in, like the RFQ process shows that we have a better potential broker. For them to get situated, get the data, go to market, and come back in time for a renewal next year. I don't want to cut it too quick. I don't want them to rush going to market. So do we feel like we have enough time if we do an
Well,
RFQ
an
process?
RFQ is a lot quicker than an RFP, and it is more suitable in this type of a scenario. It's probably a 30-day turnaround once it's out there.
Okay.
First thing I would suggest, that it's not necessary to go to the full board to get board vote. This is a formality. The committee can request that staff go to get an RFQ back together for us. So arguably, we'd have one back within 30 days and then another 30 days. So we're 60 days out. Even if we expedited the process, we still can't get an RFQ out, pick a firm, and do all the research, go back out to market before our renewal hits. So
Before, yeah, this
we're
renewal,
just not
definitely,
there.
yeah.
I mean, this, I guess.
I'm talking about for next year's renewal. I just don't want to push it so far back that we.
No.
Okay.
Well, God, we got
Oh,
plenty
no,
of
we would
time.
have plenty of time. It
Plenty.
does take us a little while to get the RFQ correct and drafted, since we went through a different process the first time that legal helps us with, but we would have more than enough time.
What is the contract renewal date with the current brokerage firm?
I don't have it in front of me, but I'm just going based on my memory. I believe that it renewed on June 1st. And so you would have to do 90 days prior to that notice that we would not renew after June 1st.
Well, it's going to take us at least 60, so.
Correct.
Okay.
So we would be within the time frame of both if the same company was chosen not to renew.
Okay. Any other? Okay, so my suggestion, if you wanted to make a friendly amendment to your motion, would be just to have the committee recommend, the committee direct staff to create an RFQ process. The full board doesn't, tell me where I'm
Yeah,
wrong.
that's what I was going to say. Legally, are we sure?
Yeah.
No, they'll have to accept, it'll go to the board to do
Yeah.
the
Oh, the
exception.
final
So-
exception.
Correct. So you do one or the other, so you can ask for permission and then be done with it, or you can go ahead and direct staff to do it, and then it can go to the full board for approval. Am I right, Ms.
Yeah.
Lisa? Thank you.
Just direct us and we'll take it.
Can we amend that, or just make a friendly amendment?
How do you want to amend it that?
Just that the
we call
insurance.
for the RFQ? Okay. All right, so I'd like to make a amendment to my action and strike that we're going to go to the full board, recommend that the Finance and Insurance Committee direct staff to create a timeline and qualification for casualty property insurance brokerage services for the issuance of a RFQ process.
Second.
Was that just a friendly amendment, so we don't have to have two votes? Say yes.
Yes, sure.
Do you agree with that? Okay. Or we can take two votes if we really, really need to. Whenever you have that prepared, it's the same foundation of a motion, so we're not going to go back to public comment. I mean, it's the same motion, it's just changing a couple of words. Once that's prepared, you can go to vote, Madam Secretary.
Mr. Bergeron,
Yes.
Mr. Hidalgo,
Yes.
3 for, none against.
Motion carries. Thank you. All right, item 3.3. Discussion and/or action regarding the Gallagher report. I'd like to invite the Gallagher team up. If we need another chair, we can pull one up. If you guys all wanted to come up, feel free to. We're going to turn it over to you. You know the game. Please speak loud and clear into the mic. The floor is yours.
Thank you, Chairman. My name is Melody Terrell. I'm with Author J. Gallagher, consultant in Covington.
My name is Kim Briard. I'm a consultant with Gallagher, located in the Baton Rouge office.
Okay, we're starting today with an agenda. We have an executive summary of cost savings impact to the budget, specifically relating to a market check as it relates to TPAs and evaluations regarding network change. We have, as well have point solutions that further reduce the budget, a service calendar, and then a host of appendix and disclaimers. Page 3 refers
Hold on
to...
now. We're having some technical difficulties.
Okay, no problem.
So do I just come down? Just here? Okay.
Go to the menu on the right and hit
There
present.
we go. Is everybody okay with the agenda? Sorry you didn't have your slide.
Yeah, only thing I'll ask is just a little closer to the mic.
Okay. All righty. So this is a typical RFP methodology, a glimpse of the approach that you would take in evaluating networks and TPAs. Actually, what we went through was what we call a market check. It wasn't a RFP that the school board actually created. There's some columns there for your review, but more specifically, I'd like you to know that our market check involved developing a document that requested a lot of information from the various TPAs as well as the networks. We identified potential vendors that we felt like would work. From that, we developed the documents. We identified the potential vendors. We distributed this document to the various vendors and asked them to respond. We facilitated over a host of 200 questions that we asked these vendors. We received the proposals, and part of our evaluation was to meet with leadership at least 3 times, as well as meeting with the finalist 2 times, 15 minutes each initially, and then an hour with administration. As I mentioned, we conducted interviews with those folks, and they presented what they felt differentiated them from everyone else. What's left to do is to select a vendor or stay with your incumbent, award that contract, and then monitor and evaluate those vendors on a regular basis. Part of the criteria that we used, again, this is a summary just for your review, but that evaluation process included cost and pricing, service offerings, experience and expertise, technology and innovation, alignment with LPS's goals, quality and performance metrics, and references and reputation. And I think most importantly, the question is, do these vendors align with LPSS strategic visions and goals? As you can see, we've are disclosing the vendors that we've requested submit proposals. Those in orange declined to quote. In yellow, we had a partial submission. And then in green, they submitted their proposals. However, there was one that was dismissed due to uncompetitive fees to claims.
So while we're still on this, Were you gonna move over to the next page? Because I want to ask a question about the ones who, so if they decline to quote, do they give a reason why they decline to quote, or they just do a declination like we're not doing it?
Some of them,
I can answer that one. There was one TPA that declined to quote, Web TPA. The reason for that decline is that they're not taking on any new business for 1/1 of '26. So they're just not writing new business right now.
So basically what you're saying, it's not us, it's them.
That's right.
Thank you.
That's right. The quoted but not competitive, the pricing arrangements, the network evaluation did not fit or align with LPSS. So different variables there. Most of it was from a pricing perspective, but some of it was from a network perspective that it didn't align with the initiatives.
I'd like to add a little something. Go ahead.
I was just gonna say, do you have the numbers from the ones that weren't competitive? I just want to see, you don't have to put them up right now, but could you send them to the insurance committee or to Trish and she can forward them to us? I
Yes.
just want to see what they came in at.
Yes, we have all the numbers.
Okay, if you can just send that to us.
Yes.
I think this is a great opportunity to mention, as we're probably going to do several times throughout this process, that even though we see insurance companies up here, right? There's people up here who are insurance companies, Blue Cross Blue Shield, United Health. We recognize the logos. We did not go out to market for insurance. We went out to market for third-party administrative services, meaning they are going to process our claims. We hold the insurance. We are the insurance company. Lafayette Parish School Board is the insurance company. These folks are bidding for our work to process our claims, not to provide us insurance. Just want to make that clear.
okay, this is a slide that progressively has gotten smaller and smaller to make it as understandable as possible for your review. All of this information has much more detail in the appendix if you see fit. What we'd like to do is sort of look to the left and show you that in blue, we're reviewing the TPA with Blue Cross Blue Shield, and they're using their national network, and that's your current arrangement. Underneath that is a potential change to UMR, which is a owned TPA of United Healthcare. They would utilize the Choice Plus national network. Then you have a TPA change to Meritain, utilizing the Verity Health Network, PPO network, and an Aetna CP2 wrap. So under the highlights of the three finalists, one of the questions that has come up culturally with LPSS as well as other school boards is, do these arrangements have the availability to negotiate direct contracts with the area providers? So certainly that moved to the forefront, and the questions were asked in the questionnaires, what did that look like? How did it look like? And we also questioned them pretty thoroughly on, how would that arrangement work? In summary, what we're saying is Blue Cross will allow you to direct contract on an exception basis, and it may be made on a case-by-case basis, but they will support you in the process. UMR said, yes, you can direct contract, but they will give us, they're limited in support. Now, and then we have Verity, Meritain with Verity and Aetna, who said, yes, you can direct contract with support. I think it's important to know that we've summarized that information, but we went into great detail in discussions and questionnaires in evaluating the differences of how these three companies were going to approach that concept. Any questions in that regards?
Well, the question is, give us more details on the conversations you had with the three companies.
Do you want me to give more details? Okay, so let me just elaborate on the Blue Cross, that's your incumbent TPA. Historically, I think you all know that, a response is usually no, that, Blue Cross is very proud of their contracts, and rightly so, right? They have very strong networks in the state of Louisiana and very strong contracts. So the response that we received, because of the desire of your organization to direct contract, they indicated that they would make an exception on a case-by-case basis and allow for a direct contract. I think through our conversations, and, we don't know where this direct contracting is going to lead. It may start with one provider. It may grow into 10 providers, right? So, I guess we felt like we were limited in the direct contracting support that Blue Cross would provide, because they would just be controlling that ability to contract. So although they said yes on a case-by-case basis, one of the things that I think is important to recognize as well is that they will support you in that process. Provider contracts are not, they're not easy, right? They're complicated contracts. There's a lot of fees and, DRGs and language in there that, these TPAs, they know what they're doing when they're contracting with these providers. LPSS, not to take this lightly, you're not experts in that area by any means, right? So having someone that can support you, we think is really critical, because they know the business and they know how to contract with providers. So they're willing to help, they're willing to support you, they're willing to sit at the table next to you to do it, but it would be on a case-by-case basis. But they did indicate they would make an exception for it.
Mr. Hidalgo, can I
Clarify that, yeah, because
so
it
let me-
says may.
Yeah, let me
Yeah.
clarify it and just make sure that I quote exactly what took place in the interview with Blue Cross. I specifically asked Blue Cross, are you willing to go away from what you would normally do and direct contract with providers such as Ochsner, Lords, Park, all of these different people that we have in our local, because we got 10,000 people on our health insurance. And we understand that even though that there are TPAs, they are also having contracts with those different people. And we're saying, okay, you have a contract. We feel like we can go to these people also and get a better contract. Would you be okay with us getting a better contract? And they were very hesitant in actually agreeing to that. And I said to them, you're hesitant and you're dealing with our money? This is not your money, this is the board's money, and you're hesitant? And I had an issue with that particular thing, not like I see at the bottom of the other two, and whether it be UMR or whether it be Maritime. I specifically asked that question because if we're going to continue to keep health insurance at a low cost, we have to get those CEOs from those hospitals into Lafayette Parish school system, and we got to start talking to them about what kind of deals they can give us, because we got to be able to do that. So I just want to point out that when we talk about direct contracting, look, the Blues, and I'm going to say this publicly, we're not keen on going with us side by side with that same CEO that they already have a contract for and trying to negotiate a contract on behalf of LPSS. And if it's better, take the new contract. I'll just say that for the record.
Yeah, and I would just like to make another comment. Mel brought up a good point that these were verbal statements. They were not, we do not have that in a written format in our RFP process. So in our questionnaire, the answer was not this, but we felt like they verbally did, make note that they may make an exception on a case-by-case basis.
But what did they say in the contract? Did they, what did they say? Yes or no as far as direct contracting?
No.
Okay, just make sure that's why they were hesitant when I basically pointed them out, and they came back with that answer.
And for clarity, direct contracting is the ability for Lafayette Parish School System as the insurer, right, to be able to negotiate healthcare costs with local providers. Not y'all's clarity, just for public clarity. But I do want to say that since this conversation has started, I have received phone calls from people who would otherwise never call me, who are humongous healthcare providers. The superintendent's office has received phone calls, and there are several healthcare providers in this Lafayette area, the big dogs, who have said, when can we meet? When can we negotiate? So they are willing to do it. So I want to say, because I had a question, what is direct contracting? Well, Blue Cross, United, Aetna, all these companies have their own networks. They contract with hospitals. They do it on a large scale basis. The Blue Crosses have all of these, rebates, overrides, all this junk built into the cost of their health care. What we want is a clean, fair cost on health care from high quality providers. And that's what direct negotiation and direct contracting would allow us to do. I wanted to add that in there. Go ahead.
So to your point, Jeremy, we continuously talk about the trend of healthcare. That healthcare is not reducing in cost, that there's inflation in healthcare. And we have a lot of politicians who have said, I'm going to fix this. And they come back and say, you know what, this is really complicated. But I think what we've heard from y'all is that where you are right now is unsustainable. And that you're willing to think out of the box. And you're encouraged by the provider community validating what you were hoping to do. And I think you've come to terms that you're not the expert in negotiating these contracts, but that you're willing to work with somebody who has an open mind to deviating from the status quo. And you're looking for assistance from those individuals or those entities to help you execute what the provider community has come to the table and indicated that they would give you. And although it's very difficult for us to say in 30 seconds what Blue, United, and Meritain was indicating, you went through a very thorough process to get to where you are today. Today, under these preferred provider networks where it's typically a discount off of bill charges. You can move into DRGs, you can move into capitation. These are all these little buzzwords that insurance companies use to negotiate with providers. It appears as though that is moving to more what we call population and health and value-based discounting. And point solutions are a part of that, and outcome medicine is a part of that. And I think that when you look at where you are with your alternatives, you have flexibility with the two, and you also have the opportunity to move into these value-based arrangements in these population, more outcome health management programs. That's what we've heard. And I think that's what we're illustrating. Okay.
So moving on to UMR, we indicated that they would allow direct contracting, however, with limited support. And, you know, what was stated in our finalist meeting is that absolutely, if LPSS goes out and secures a contract with a provider, we will take that contract, we will load it into our system, and we will adjudicate your claims in accordance with that contract. The support comes in making sure the language is, you know, like it should be. They did indicate they could give templates to Gallagher and kind of guide us along, but, you know, it was more, you negotiate it, you settle on it, give it to us, and we'll load it into our system.
I believe that they indicated that there were third-party people out there that could do that on your behalf.
And then Meritain, with the help of Verity, they also indicated that, yes, they would support you in direct contracting, and then they would also support you with the actual language in the contract. So reviewing it, making sure it, you know, met certain criteria while you're negotiating that, that arrangement with a specific provider. Questions?
Okay, so part of the highlights included the type of select network that they were utilizing. All of these TPAs and insurance companies have various networks that sit under their umbrella. Currently, you're with Preferred Care PPO with Blue Cross, which is a national network. There's no limitations to, you know, it's not like a select network where Lourdes is in, Lafayette is out. So all of these networks that are alternatives have the Lourdes facility and Lafayette in them as well. So currently you're with Preferred Care PPO network. UMR would be utilizing Choice Plus network, and then Meritain would be using Verity with Aetna Choice POS2 is the WRAP network. What's important, I guess, to note is that all of these TPAs have limited access networks. We did ask them about their limited access networks. We've talked about that in the past, you know, with utilizing Blue Cross. That's not what we're showing, and that was not the goal of the committee or the board in the past, to look at these narrow networks because it was more of your philosophy to have more access as opposed to limited access to providers.
So these limited access, or whatever terminology they're using these days, basically includes steerage. So they would cut a deal with another facility at a higher discounted rate off of bill charges, but you're pushing your patients, our insureds, to certain facilities that they might not currently go to. And if they chose to stay where they were, they would have a higher cost. I think that we philosophically didn't want to allow, or again, we utilize third-party administrative services from these folks. We don't buy insurance from them. So we didn't want an insurance company picking winners and losers and telling us where, you know, our patients were going to go if they wanted the best deal. Now, if the providers themselves don't want to come to the table and negotiate, well, that'll be their own issue. But in this case, we were trying not to steer that. So just to be clear, I don't know if you guys remember, but the proposals they gave us early on, and even last year during our renewal, included select networks that had steerage to one hospital or one provider over the other. And it was quite a bit of savings, as you would imagine, because they had cut a better deal. But then you're telling people, hey, there would have been a ton of disruption to do that, okay? Just like there's arguably going to be disruption here, which we haven't gotten to that, and we'll talk about it. But just to be clear, that's what these select networks are, is pushing to one facility or the other.
Another area regarding the highlights that, you know, bubbled to the top with these 300 questions that we asked these vendors was, you know, will you give us any on-site assistance? Blue Cross has no on-site assistance. UMR agreed to a dedicated, or offered, not agreed, offered a dedicated on-site employee valued up to $175,000. And then Meritain offered up an online wellness coach. Yeah, I'm sorry, on-site wellness coach once a week. Any questions?
So under the UHC Choice Plus, the dedicated on-site employee, what would they do? So it says it's valued up to 175,000. The next question would be, how do they derive that number?
Yeah, so they would be, dedicated to administration. They can assist members with, any claims questions, any network questions. They can, they'll be able to access the, UMR system where they can help with, triaging someone maybe to a nurse, right? So, any kind of disease management or chronic care management. So, really just helping with any administration of the plan at the member level. Yep.
Okay, so, all of this was done because of the budget. All of this was done because of trend and inflationary cost and how are we going to pay for it and how are we going to sustain and continue, with our healthcare plan. So what we said was, if you stay status quo and you don't make any changes and you stay with Blue Cross, it's either going to require an increase to the employee's contribution and it's going to cause plan changes to be made. That would be increased deductibles, increased out-of-pockets, higher co-pays, that sort of thing. And if you recall, we've gone through that with the board, in the last 6-7 months. We have a click here. It's on page 7 and 8 of the agenda that helps you, I'm sorry, not of the agenda, at the appendix. So it's at the back in the appendix. Do we want to look at that?
It's not in the appendix, it's the following page.
Page 7 and 8. Thank you,
I don't
Jeremy.
think right now we want to look at it, but
Okay.
but I'd like for you to finish going through that column.
Okay.
And then we can refer to it.
Sounds great. If you move to UMR, one of the points is there is going to be provider disruption. There won't be any premium increases, and we won't make any plan changes. And we'll look at what that disruption report looks like on who the providers are and the number of occurrences. But when we do a disruption analysis, what we do is we take the providers that in the claims data of 2024, and we bump it up to the provider directory as of today with UMR. And what we saw was a 2% member disruption. We did the same thing with Meritain. Meritain's offer would require no premium increases to the employees, no plan changes. They'd have the same benefits and the same premiums, but it had a 4% disruption rate.
Can you identify that by member? Or it's kind of more of a holistic approach?
So the disruption analysis, so it is by claim level, but we do not have member information on the disruption report. So we can't identify
Well, yeah, I was just wondering if we
members,
could more, not we,
but we can identify how many members.
Okay. Go ahead.
What I'd like to add is that any time that you move from one network to another, there's typically a period of time in which you allow somebody to change providers in a life-threatening situation. So let's say we have some large claimants, and they're under the care of a provider that doesn't want to join our network, because remember, we're going to offer for all providers to join the LPSS network. But if somebody is acutely incurring care that requires care by that provider and would cause injury or a change of outcome to that individual, you make an exception for a certain amount of time.
That's fine and good, but even beyond that, what is the chance that the current providers that, are in the network today, the PPO, the Preferred Care PPO network?
Mm-hmm.
I mean, Lafayette Parish, we're talking about here. I'm not worried about what happens anywhere else in the country. I'm talking about right here. What is your experience on what are the chances that these folks are not going to want to get into this network and maintain the ability to have access to 10,000 belly buttons? And furthermore, this has been done. I mean, LSU and many others have created, per se, their own contracting. So it's successful. We know it works. And I believe if anybody can do it, we're just as resilient as Baton Rouge.
Mm-hmm.
So my question is, what do you think the chances are that this disruption is going to really be non-existent by the time January comes around, when all of this would kick in?
I mean, realistically, there's going to be disruption until we can get those providers on board. But to your point, you would think that these providers would be added to this network unless they have a business reason not to.
I have a question. Are you good? Okay. So it says here, no premium increases and no plan changes. Is that based on the projections we have for that $70 million potential claims next year?
Yes, great question, right? Yeah.
So going into year 2 or 3 of this, because this is a 3-year contract, correct?
Mm-hmm.
So going into year 2 or 3, we don't know if there'll be premium increases or not. This is just based on the $70 million projection that we have.
That's correct.
And to the point, if we start to see that 70 million go to 75 or 80, we can go renegotiate those contracts with like Ochsner or Lourdes or the providers who may be a huge chunk of the cost, right? Now, this is not prescription. This is just for medical claims. Like, so we can always go back and renegotiate a lot easier with UMR or Maritime, right? To keep those costs down, so we don't have to do premium increases.
And actually, these are year-to-year contracts, with the exception of, they're year-to-year contracts. But when you look at the credit and allowances that they've given you, and then you look at, there's a footnote that says there's penalties at early termination, so some of that you may have to give back. But as it relates to, your $70 million health plan, really, these contracts are year-to-year.
Okay. Let me ask a question to the superintendent. Mr. Superintendent, and this is a rhetorical question. How do you think the employees of Lafayette Parish School System would feel about taking a 25% increase on their Blue Cross Blue Shield premiums?
Well, I'm sure all of you realize that you just gave them a across-the-board raise, where starting teachers are at 50,000 and everyone else got raises. Historically, I will tell you that the sentiments from our teachers is that when you give them something, you're taking away something. And I would just hate to do that, and I can tell you, I don't think that any of the retirees here in the audience can want a 25% increase in their premiums or change all of these designs, because when they say change, that means we're not having 80-20 anymore, it's going 70-30. That means there's more money coming out of people's pockets. So I think it's twofold when we look at active and we look at, I think it's not good either way if we're talking about increasing premiums and making deductibles, not very palatable as far as in y'all pockets, and that's what it comes down to. So we're going to need to look at all of this and really kind of just weigh in. I will say that the big decision that we all need to take into account is, we have for that insurance business have already put in $6 million. There is a projection that they're telling us that we need another 6. So whatever we can save here, I would prefer not even, if we got to keep the 6 in there already, which is already in there, let it be there. But they are saying that this another 6. I'll give you an example what I mean by the increases. Ms. Gardner just mentioned to me there was an individual claim that came through for $1.2 million. $1.2 million. That is why they're saying these increases, et cetera. So you can't control that, and we need to take care of those individuals. We need to take care of whoever that particular situation is. But it comes down to is when there is an opportunity to save money, we need to do it, because that could be anyone in here that we're not going to deny services. You all need to have your services. You need to be taken care of. But when there's opportunities for us to take care of saving some money here, we need to kind of look at it.
And Mr. Touchette, to add to Mr. Bergeron, I know Ms. Melody and Ms. Kim will show you, when you see the next sheet and we look at the comparison for what the 25% increase looks like, we did a side-by-side comparison so people could actually see it, and showing how it would change the benefits. What Mr. Touchette said is accurate. We budget, I think, Ms. Trish, about $550,000 a week for billing for our claims, and just last week was $2.6 million for 1 week. So it's definitely not on the decrease.
So I think before we go into the estimated savings compared to current, do you want to look at the pages 7, 8, 9, and 10?
Yeah, it's got to be looked at, so let's go ahead and do it now.
Okay. So
Miss Melanie, could you add some, hit the plus button just a little bit so people could see just a little bit better of how you can see that where we are and what it would look like. Thank you so much.
And
Okay.
also give some context to this, because I see these numbers, and and if it's on here, forgive me, but I don't see what we're basing this on. Are we comparing this to where we ended the year last year, which is a $6.9 million out of our general fund, or are we basing this on flat?
this is on the budget of the 70 million. Is that correct, Tony?
Yeah, so that's a
Right.
reoccurring nearly 7 million, minimum of $7 million a year coming out of general fund. So what you're showing us, thank you, but this doesn't even take us to a sustainable number.
No.
Correct. This is showing us giving 6.6 million to start off the budget. Every year, correct.
Right.
So not
That's
even
correct.
breaking even, front loading the budget for the 26 fiscal with 6.6 million from general fund, yes.
But just for clarity, we haven't gone back and shopped prescription yet, or we haven't got those numbers yet, right?
It's RFP'd at this time.
Right, you're correct. It's a process.
All right, third-party administrators and networks today. Okay, so you have 3 plans, and in order to reduce claims, every plan after the deductible, the plan would pay 70% as opposed to 80%. So the individual will be out of their pocket 30 cents on the dollar, not 20 cents on the dollar. What we're doing on Plan 1 is keeping the deductible the same. On Plan 2, the deductible is increasing, as well as the copays. And on 3, the deductible is increasing. And then what's happening is out of pockets. Well, you can see the changes in red. Your out of pockets are increasing as well on Plan 1 and Plan 2, and decreasing on Plan 3.
Now, this illustrates if we make no changes and we continue on with
Blue Cross.
If we make no TPA changes, and we continue with Blue Cross.
Right.
At the top of the page, it says will not meet budgetary requirement. That 3.8 million, is that in addition to the current budget of 60, give me the number, somebody, what's the current budget? 68, is that in addition to the 68 million?
No,
Okay.
that would reduce the 68 million. And why is that? It would reduce the 68 million, if I understand your question correctly, because you would pay less in claims. You you would shift that cost of those claims to the employees and the retirees.
But Melody, I guess what Mr. Hidalgo's asking is that these changes here is going to yield how much, regardless of what the budget is? What is this gonna yield? Is that $3.8 million dollars?
Yes.
Which is not even cutting into the 6 million we already put in, plus
right.
another 6 million outside. So
That's
that's
correct.
the reality. Mr. Lejeune, you get it? So we already put in 6. They're saying with these changes here, the 6 that we already put in, it's only gonna be 3.8.
Yeah.
We only cutting that in half, but then these guys are telling us we're gonna need another 6 to put back in.
And so in addition to
I was just, yeah.
those benefit changes, if you stayed with Blue Cross, you could look at increasing the employees' contributions.
So we've said all along that, and correct me if I'm wrong, Ms. Hidalgo, we've said all along that premium increases would not close the gap alone. And this is not just premium, it is actually benefit changes. So it's a twofold. In the past 2 or 3 years, the only change we've done truly is a premium increase. We've done 15% in the past year. But this would be another 25% increase. We put them side by side so people could actually see where you would stand. And we'll scroll over to the right for the retirees in just a second. So the first column would be your actives. Your second coverage tier, it says retiree non-Medicare. So basically, pre-65, not eligible for Plan B at this point. And then if you scroll to the right, Miss Melody or Kim, this would be the retirees that are on, that have Plan B option through Medicare. Again, the retirees, you do have still a semi-discounted rate after the last board vote last spring. But as you can see, the largest hit is that enhanced plan would be almost $1,150 for our actives and our pre-65s.
And I guess I'll just add this to what Ms. Gardner stated, is that, and board members, we are not just looking at increasing premiums or changing deductibles, the plan. We're having to look at every aspect of it. We just talked about TPAs. Well, there's a third party that we need to make sure we have the best TPA that's giving us the best deals. And we also have this RX plan that is gonna also be some. So we're not just gonna get it from one area. We're gonna have to piece it together and make sure that whether it be TPA, whether it be our drugs, whether it be the premiums and the deductibles, the plan itself, it can't be to where you're just doing one thing. I'll keep going back to is we should not be hitting our retirees or our active employees if we can stay away from it. Because again, cost of living is constantly changing, and this is hitting people in their pockets, and they're not getting, the things to be able to keep up with it. So I want to caution us that we're not overburdened, whether it be a retiree or whether it be an active, because we got to stay away from just keep taking away, and we got to find other solutions for this.
When Gallagher actually, Mr. Touchette, to follow up with you, when Gallagher actually brought to the table last year as one of the options, without going through some of the cost savings of the tier, they did predict that it would be between a 14 and I think maybe 21% increase last year. And actually the board put up the $6.6 million and only did a 15%, not to hit the employees and the retirees as hard on the premiums. But still front loading with the 6.6 on loan from the general fund, we know that it did not close the gap at all. And so that's why the extensive initiatives to find ways to do it, and this is one.
I'm going to go back to.
May I ask a question? For the increases,
the 25% and then the 30, 70, 30. That's Louisiana Blue, right?
Mm-hmm.
So why is that only with that company and not the only two? Can you explain that to me, why?
That's a great question. Okay. So the idea of going out to a new administrator and to go out and evaluate networks is so that we could look at how much was that third-party administrator charging us to process the claims and manage the plan. The other piece of it was to take a 2024 claims dump of all the claims that were paid and allow the new TPAs to reprice those claims and and us to validate those claims to look at how much would these other third-party administrators allowed to be paid to the provider community. And through that process of those fixed expenses to operate the plan and those repriced claims and that opportunity to be more flexible with point solutions, other initiatives in which to reduce costs, and direct contract, we have off to the right a savings number.
So, Mr. Lejeune, I think I can simplify that. She's really good at what she does, but she's talking professional. I'm going to talk third grade. If we were with United Healthcare last year, all year long, and we had the exact same claims that we had all year long, our healthcare costs alone, not prescription, would have been $2.7 million less than they were. That doesn't include the savings on the administrative fee, the fixed costs, or anything else. Had we been in the Verity with the Aetna Choice POS wrap last year with the exact same claims, we would have had $2.6.5 million in savings just on healthcare, not prescription, no other costs. What that represents is the negotiated contracted pricing with providers, the difference in that of each one of these three companies. So when I keep hearing folks say that Blue Cross has the best option and the best deal, well, what they did was they took every claim we had, they put it in a file format, and they sent it to these three companies and said, if we didn't have to send it to Blue Cross, they're the ones that processed the claim. We already know what the cost was. But we sent it to the others, all of the others, and they ran it in their system and said, in our network, with our providers, if you would have had the same claims, you would have had a significantly amount less of claims. Again, this is the contracting and the direct negotiations that they have with providers. And I'm taking it a step further. Hopefully that answered your question, but what we're trying to do is to do even better than that. Okay, to do even better than that. And it was disheartening to see our current provider come back with actually an increase in cost for this year, even after they knew we were at the market check. So I don't know if that answered your question, but hopefully it did, in that this is what their network would have paid out. Because we are the insurance company, but we don't get to decide what doctors and hospitals and providers charge for their services. We hope to help them decide what they're going to charge for their services through direct negotiations moving forward, but if everything was stagnant, that's the answer. Blue Cross's deals they've cut were the claims costs we saw last year, and United Healthcare's deals that they had cut, we would have had that much less in claims costs, and so on.
That's right. Everything was correct. Just said a little
Mr.
differently.
Lejeune, did that make sense, Mr. Lejeune? You're good?
Okay, so if we move to UMR, there will be 2% reduction of disruption, and that report looks like the next page.
You want me to go to that? There?
Yeah. So these are the top 10 providers by cost, by payments that we made to them, the first section. And then the next section is based on number of claims. It's just a coincidence. If you're in an ambulance, there's 761 trips to the hospital. So that number's the same on the bottom. But then you can see that the numbers gradually go up on the bottom because we're using occurrences. So it just kind of helps with disruption.
So, Mr. Hidalgo, when you asked if we had a disruption by doctors, I think this is what Ms. Kim was saying. We have a disruption by the number of claims that was filed, not specifically the member in which doctor.
Well, my point was to get at, and I'm glad we have this in front of us now, because my point was to get at, I see 2 providers on this page who have reached out to us and who are ready to direct, negotiate, and contract with us. So, so we see a disruption here in that there's a company who's not in the network, in any of the 2 new networks, but I'm telling you now, they're ready to get in the network. So
And
that's...
Yes, and to your point, Jeremy, Acadia Ambulance, if you take that number and you say now they're in the network, it reduces the disruption by 2% for UMR and Meritain.
Huge. Huge.
So question just for, so I'm not on the, excuse me, I'm not on the LPSS plan. How would I check if I'm in coverage under United Healthcare or Aetna, Verity? Like, how would I check that right now?
LPSS went above and beyond. There's a one-pager that was distributed, I believe.
Mr. Mr. Perez, could you please go back to the original agenda item for this and pull up the one-pager regarding the cross-check for services? It would be the other presentation that was attached to that agenda
So you're
item.
talking about the PowerPoint presentation that they currently have up? That's all we see on the.
There should be a second one attached, one-pager.
I think it's at the end of the, end of
At
the
the end.
PowerPoint.
If you go
The
back to the
PowerPoint.
agenda,
You wanna
item
do that?
3.3,
Scroll-
there's 2 documents there. One of
Yeah.
them is BIC provider in network directory final.
Yes.
We got it.
You got it.
Ms. Melody, I thought it'd be advantageous to pull it up so you could talk about what our system did to assist our employees and our retirees.
Okay. I know it's going to come up. I'll go ahead and start talking. It's going to be a one-pager that's going to show how you check currently Blue Cross Blue Shield to see who's in the network. And we've given a link in which where to go, and also customer service number. They did the same for Meritain with the Verity and Aetna network, and did the same for UMR. They were very, very careful to make sure that the font was the same, and they had given the opportunity for all the incumbent and the 2 alternates
So
to
the,
have the same information.
so the insurance department here created the one pager, and they are clickable links. So even if you open it on your phone, you'll be able to click it and follow step-by-step directions to be able to check your doctor and providers for all 3 networks.
Question? So I guess this is a Trish question. Trish, can we send that to our insured individuals so they have access to this? Okay. Because not everybody likes to go to the board doc site and look at.
Mr. Bergeron, we can even do better. We can send it to actually all employees in the school system, and that way, because even some that might not be on our insurance could be considering getting on our insurance and open enrollment. And then we do have an electronic communication for our retirees that we can push it out also. Ms. Trish, did I cover all of that?
Okay, there's another disruption report for Meritain and the Verity Aetna network. So we talked about disruption.
Yeah, they have to put it back.
Again, this is based on the top 10 largest claims and then utilization for the top 10.
Yeah, I mean, but look at the top one. I mean, the top one, aren't we currently talking about a solution to this problem here through in-home Through the point solution?
We are, and we're going to talk about that in a minute with the
Oh,
point
I
solutions.
don't, I'm not going to get ahead of the game. Okay.
No problem. All right, so any questions on that? We have a disruption report for you. Okay. Jeremy pretty much covered it. So basically, we look at the plan year administration and how much it costs for folks to manage your plan. They all added these little value adds, either for the first year, second year, or third year. Actually, Blue Cross's ASO, Administrative Services Only, fixed cost fee went up, but they did give you a value add of $100,000, which offset their increase to their admin fee. UMR has 3 plan year allowances. Again, if you look at a footnote, if there is an early cancellation, you would owe some of that money back. Same with Meritain. They have 1 year and a 2 year and a 3 year, and it works the same way. From the administrative services only fee and taking into consideration those credits, basically you would pay on your fixed cost or your ASO fee, your administrative services only fee to Blue, you'd pay $2,800 less in 1 year. To Jeremy's point, the second year it would go up because you wouldn't have that $100,000.
Oh, it's annual.
Oh, it is annual?
Yeah.
Okay, so that would be a reduction in the fees annually for 3 years.
Yeah.
Okay. So if you move to UMR, you would pay in the first year $1,258,000 less. And to Meritain, $594,000. And of course, that UMR fee of the minus $1,200,000 goes down in the second and third year because their credits go down. Your claims, when we reprice them, of course, they stay the same with Blue. With UMR, you would have paid $1,400,000 less, and with Meritain, you would have paid $2 million less. So when you take into consideration the admin fees, the credits, and the repricing of the claims, you're at minus $2,800 with Blue, you're at minus $2,700,000 with UMR, and you're at minus $2,600,000 with Meritain. And then we did the same for the second and the third year to show you what those variances would be.
So board members, just to kind of direct, to kind of make sure that, and this is what we all need to kind of understand, is claims are going to be here. We're going to have claims this year, we're going to have claims next year. So you can look at all these allowances and these credits. We can't live on allowances and credits. We have to understand that claims are going to be claims. We're going to have claims every year. Who is going to give us the biggest bang for our buck as far as claims are concerned? Because, as I just said, that $1.2 million, we didn't have that last year. We have it in that one claim. We have to make sure that we zero in on, look, people can take away credits. We're talking about claims. Claims are where we need to make sure, because every single one of us in here wants to make sure that we go to our people and we get what we need to get taken care of, and that means there's a claim there. We gotta make sure that claims is where we're really focusing our attention.
And Mr. Touchette, I think what you're meaning by claims, just to be clearer, is that it's the allowable expense that we're going to get back. So when you get your explanation of benefits and it says it might cost $12,000, and yet it says the allowable expense was $400, we're paying the $400, but if you didn't have the insurance, you'd be paying $1,200. It's getting the best deal for the allowable expenses of what we could get, and that is what those numbers are representing. Am I correct, Ms. Hidalgo, when I'm trying to clarify that?
Yes. Let's talk about and thank Trish and her team for the one pager. Let's go back just a little bit. You don't have to put it up, but that one pager, what? That's okay.
No, we,
Technology problem?
yeah.
Yeah, we don't have the one pager.
No, we don't have to go back to the one pager.
Oh,
I just want to talk
okay.
about it.
Okay.
The one pager has the data, if I saw right, clickable links to all providers in each network. But that's as of today.
Right.
That's not as of tomorrow or next month or in December. None of this goes into effect if we make a change until January, correct?
That is correct.
So if there's a provider in Blue Cross Network who someone is currently seeing, but they're not listed in the United Network, that doesn't mean that they're not going to be in the United Network
Yeah.
when we
And-
launch in January.
Yeah, and I would even say, Blue Cross negotiates their provider network on a regular basis too. So even if someone is in the Blue Cross network today, it does not mean in January that provider is going to continue to be in that network. That is a constant negotiation by the networks and the providers.
Can we just go to one of the disruptions? Because I
Yeah.
think that'll give it, go to one of the disruptions. There, that's it. Can you just blow that air, you go?
Yep.
Okay, right there. Okay.
So right now, what this says is if we would go with United Health, UMR, which is the United Healthcare Network, it says the most recognizable name on that for me is Acadian Ambulance Services. It says that Acadian Ambulance will no longer be in the network. Well, Acadian Ambulance is only in one network here, correct? Currently. I'm not going to speak on behalf of any company. I cannot do that. But I'm going to tell you that there are many companies, many providers who have stated, we want to work with you guys. We are going to, if you can contract, our biggest problem has been insurance companies coming up with contracts on our behalf, right? We have a TPA, but they also own an insurance company, so they have a network. And so what they want is they want to drive this. It's holistic for them. They want all the business. They want to drive it all. They want to have the insurance company, have the network, and then they want our business too because they want to drive people to their network because that gives them more ability to negotiate. But they ain't negotiating very well. We see that right here on this report. So in this case, what we want to try to do, that's one of the main reasons, advantageous reasons to direct negotiate, is to cut out that middleman. There's no more fat. There's no more junk in a contract. It's provide good health care, give us a good price. So if we did go direct with any one of these companies, that automatically, just not automatically, but significantly reduces that disruption amount to where now we're getting back to ground zero, which is what I was asking you much earlier in the presentation. What do you believe the reality is, especially looking at this list, and these are only the top 10, right?
Yeah.
But
That's
especially looking at this list, what do you believe in your experience that the reality is of this just disappearing? All of us, they're going to be in the new network. What do you think the reality is? I'm not going to hold you to it because you cannot, I cannot, no one can make a decision on behalf of that provider, but we have 10,000 belly buttons.
What I would say, Jeremy, is it was very common practice for employers to direct contract in the 80s and the 90s, in the years 1980s, 1990s. And then Blue Cross, United, Cigna, Aetna did a really good job trying to get that market share back. And they negotiated their contracts. And there was a movement from a lot of the employers who had direct contracting to move to BUCA, Blue, United, Cigna, Aetna, because they had the better discounts. We're starting to see a new movement, and that is employers wanting to evaluate their networks more, and there is more talk of direct-to-employer relationships than we've seen in the last 20 years. So what I would say is that it can work, and it can work very well. It's a new movement. You already have providers coming to you telling you that they're willing to direct contract. I think that's the conclusion. You know, you have providers coming to you as a large entity, and willing to direct contract.
Mr. Hidalgo, let me just add that, when I look at this list, I look at these individuals that are in this audience, but I also look at all of these active employees that are throughout our system. And I start saying to myself, I go to the claims, go to the number where it says claims, 761 at Acute, 514 at Acadian, 340 at Coolidge. We're going to need to really, at least for the three-digit numbers, really try to be proactive and try to minimize as much disruption as possible, regardless if we go with UMR, regardless if we go with Aetna. We have to do this because it's going to cause issues with employees, and we want to try to minimize that as much as possible.
Well, and to your point, Francis, these same providers are going to look at this data and say, I don't want 514 less ambulance
That's what
trips.
I'm saying. If we just apply common sense to this, you're going to tell me that these providers are going to say, oh, well, we're no longer in their network. We can't provide services to 761 belly buttons. That's not going to happen. It's not going to happen. So I think if we apply common sense and a lot of hard work, my goal is to get all of this locked in before January. If we were to make a change, my goal would be to get all of this locked in before January so we hit the ground running, no disruption. But I get what you're saying. Okay, in the interest of time, let's unless there are other questions from the committee, let's keep moving. And I want to apologize to the public who are here because I failed to mention this, but we're going to maintain the same process as we have before. There's a notepad on the podium. If you guys have a question, we need you to write it down legible, please, and please put your name beside it. If there is no name beside it, just like public comment, when you come up, we ask you to state who you are. That is it's professional protocol. We're going to do the same thing with the notes. If there's a question with no name, we will not consider it. But if you do have a question, please go to that notepad and write it in. Okay.
Well, I just want to make a point too. There is an action item up, so public comment will be available because there's an action item.
Oh, yeah, absolutely. We're certainly going to have public comment. But public questions will be in the form of the notepad.
Okay, in addition to reviewing third-party administrators and networks, two programs that we feel can improve the budget, reduce the amount that we believe, that through our projections that you need to budget for. These programs are strictly voluntary, but they are ways in which to further claims reduction. One program is Quantify Infusion Therapy Point Solution, which we believe there will be an annual savings of about $764,000 in the claims that actually where the folks go to have their infusions done. FedLogic is a point solution that we believe will save up to $670,000 if we have as few as 7 people participating in that program. Again, through all of our evaluations, to try to keep it simple with the team, we color code them, red, yellow, green. And these are 2 green programs that make us believe that folks are going to only look at this as a positive, not a negative, to their experience of accessing health care. Quantify is
Oh, you're going to go into the details?
Yeah.
Okay.
Next page. Quantify, what is it? It's a fully integrated specialty infusion solution for employers, which of course you're a self-funded plan, so that would trickle down to the patients. There's no investment cost. Quantify is actually a provider. It is a high-performance provider that is offering you less amount of reimbursement for their services. Year 1, if the client chooses to opt into implementation, then there's no disruption, meaning again that the employees or the patients choose to be in that program. They work with the majority of TPAs. I will tell you that there are some TPAs that are not allowing these programs, typically because, again, they already have relationship with providers and they don't want that disruption. How does it work? For the most part, what happens is the providers are identified in the way of large case management reports, and they reach out to the patient and tell them what their options are. An option very often is not to go inpatient for your infusion. It can actually be done on an outpatient basis with qualified practitioners. It's more convenient for the patients. They typically love to be at home as opposed to being, in an inpatient or outpatient environment where they have to stay for several hours. These programs have been vetted out by administration. I believe there's been at least a couple of calls with the providers, and so everybody is aware of what the details are and how they work. FedLogic is a program that's very interesting. I really like it. It's a very holistic approach to helping people navigate what their choices are in healthcare. It was developed by a fellow that had a very disabled child and actually went bankrupt through a process of accessing care for that dependent. There's an estimated savings. We used an average. There is an investment on this program. You do have to pay a per employee per member fee, but they do guarantee a return on investment. The way it works is employers aren't able to help direct patients to certain providers, if you will. So, for example, maybe a preemie baby is a perfect example. A mom and a family has a baby, it's premature. They're not aware of all the social welfare programs that are available to them. They're more attuned to the care of the baby. They may not be aware that they're able to access Medicaid immediately. So this program is really educational in nature. We don't give them claims runs. We don't tell them to call this FedLogic organization. FedLogic reaches out and has communications to the employees and allows them to understand that if there is a need, then what happens is that individual accesses their program. Another example is, Medicare. Do folks understand supplement programs? Another example is dialysis treatment. Some people believe that they can't get on Medicare until they've accessed 29 months of being a end-stage renal patient. There's thousands of programs that are out there. For example, it could be that they reach out to Social Security, but Social Security is not allowed to tell them about the social welfare programs that are available unless they're asked. They have to make an ask. So they're not aware to make that ask. So these are educational programs that really help people understand what other options are.
Question? Yes. So, point solutions. Is it a either or option, or do we use both of them?
Both.
Both, okay.
So they are independent, thank you. They are independent solutions, and we're going to continue to bring you point solutions on a regular basis. Because to y'all's point, you have to control the claims cost. We want to be better consumers, and we want to have better access, and we want, quite frankly, better outcomes as we access healthcare. And that's our job, to bring those solutions to you for your review.
On the quantify, on the FedLogic, up to $670,000 savings with 7 people participating. What does that mean?
Well, for the most part, what they do is they kind of look at our claims. They understand the demographics. They understand age factors. And they believe that if they maybe have one phone call, let's just say a preemie baby, and we mitigate that $1 million, $2 million claim, and that individual makes different choices regarding their health care, then that's how they've saved. If they take a patient off of you being primary for end-stage renal disease, they've saved on that patient, on that claim and that patient.
Okay. Committee members, Mr. Lejeune, anybody have any questions so far? We're kind of getting to the end of the presentation, and it looks like. But before you go into timelines or anything else, I want to see if you guys have any specific questions. Okay. Carry on.
Okay. With that said, you know, we always kind of end with a service calendar. We update, this service calendar is very fluid. We do update it on a regular basis. I'm not the one that updates it, but I am looking for, what I was really looking for is pharmacy.
July.
Okay, great. That's our next, you know, big agenda item, if you will, as it relates to potential savings. But this is for your review, and this is fluid. This keeps us on track. This keeps us accountable. This keeps you accountable. And with that, sort of concludes.
Yeah, so if you just see that pharmacy is the next thing, and that is where we're going to be kind of just looking to see what we can do as far as making sure that we look at that also. So that'll be the next thing that we're dealing with.
Right. And we'll bring our pharmacy team so they can confuse you as much as me. They're very good at what they do.
All right, we're going to go through some questions. And then whatever, Trish, if you can, whatever questions that we can't answer, hopefully we can answer them all. But if there are any questions we can't answer today, please keep note of them. I'll circle them, get them to you, because we want to get these answers. I will say that one of the things I'm going to attempt to do is get together between now and next week's board meeting? 12. Between now and next week's board meeting, I'm going to do everything I can to work with the superintendent and his team to get a workshop put together where we're going to come back to this room, and it's going to be a little less formal setting, and hopefully we do it next week or whenever. Give it a little more time for all of this to sink into our heads, come back to the table. We're going to put a time limit on it because we're not, you know, the staff can't be here for 6 hours, but, you know, we'll give whatever reasonable amount of time and allow questions. We're going to be hopeful that you guys are going to be able to show back up. This is brand new, and I'm sorry to spring it on you, but I think that it's important. There are a lot of concerns, and it's not fair to have invalid concerns lingering out there. I think we need to hit them. We need to address them. So we'll answer these questions the best we can. We're also going to have a motion made, if for no other reason than to have public comment. And then we're going to try to get that workshop lined up. Okay? So the first question, will MD Anderson be included in network? I can only assume that means in the other two options other than Blue Cross.
I would say we need to refer to the provider network directory. I want to go ahead and say, if I wasn't in this very public forum, that they're in the network, but because I want to be cautious, you know.
No, don't answer.
I don't want to overstep boundaries. You would also think that if somebody was interested in MD Anderson, that it would have shown up as a large claimant, and therefore they would have been included in the network, and that's how I would answer any employer of any size, any time. But my canned statement, and where you went above and beyond, is they need to check that directory.
If we can, yeah, if we can work that in the background, we have
We
other
can
questions.
have that answer for the 12th at the next workshop. I'd be shocked if they weren't in the
I would
network.
be shocked too, because they would be on that list.
You would think, but maybe somebody's thinking about having a stay, unfortunately, at MD Anderson, and they haven't incurred a claim yet.
They'll work on it, we'll try to get that before
Yeah.
we leave. today.
Melody,
Let's
I
go
will
to the
say,
next.
some of those disruption claims are like $47,000 and all the way at 10 million. Anything at MD Anderson, we already know multiple people who are at MD Anderson in our system, and it would be above $47,000
Yeah,
in a
that's
disruption.
that's what we're saying as well. I mean,
Yeah,
it would be
so-
hard.
So I know that's not an answer, we're gonna get one, but if we,
Yeah.
again, if we just apply common sense, they would have been
Exactly.
on that list.
Right.
If they were not in the network.
That's
Okay, let's
correct.
move on. Is Tria Health still part of the plan?
Yes, it's currently a cost savings that we have in play at this time.
The answer is yes.
Thank you. Page 22. Is the 40% increase in ISL premium simply an assumption?
Yes.
Let's get to that here right quick. That's a great answer. Do you want to elaborate or move on?
I'd move on. I think it's an estimate. It's a small portion of the overall cost of the program, but we're conservative in that estimate. Yep.
Okay.
I think we've had some big claim runs and some big claims, and, big claims are what drives that number. We've included very conservative estimates in all of our projections. And of course, this comes from underwriters and actuaries. Because of the specialty medications, infusions, and gene therapy drugs that have come to the market.
Okay. Will United give LPSS access to claims?
I think
Claims
the answer
data?
is absolutely yes. They do it with formal documentation, making sure that they're protecting private healthcare information. But the answer is yes.
Okay. Will the amount you offer to pay a provider determine for some if they will join the network?
Yes.
Yeah. It's a negotiation, so.
We're not going to let providers overbill you.
Yeah.
So the answer is yes.
So even if it's your favorite doctor, we're going to be fiscally responsible.
That's correct.
Okay. Page 20. How accurate is the data if retirees on Medicare are not included?
It's more accurate that the retirees have been carved out, because the retirees, you're paying secondary on those claims, and you don't want new vendors coming to the table and looking at that coordination of benefits as a potential savings to your plan. It's more correct when you're doing a provider network evaluation to carve those Medicare recipients out, so there's no confusion on that difference of the plan normally paying 90-something% of the claim, and now you paying significantly less. So the answer is you always want to carve those out
When doing a reprice.
when you reprice claims.
Okay. Meritain is a TPA using Aetna Network. Is it true that a doc who takes Aetna can refuse Meritain? Meritain is a TPA. The answer is no.
No. The
No.
answer is no.
The answer is no. If the doctor's in the network, it matters not who's
There's already a contract in place between Meritain and Aetna.
okay. So the answer is no. Are administrative fees the same for each company? No.
No.
Do we want to, did we kind of,
Is it in? Yeah, it's in the appendix.
okay.
So there's a big old document that basically talks about.
Simplify it,
the-
though, we don't have to go line by
Right.
line. It's in the presentation.
Correct.
So let's see. Give me the final numbers, please. The final administrative costs. Let's see.
For 2026,
Yeah.
I can't see it.
for Blue Cross would be 2.9 million. For UMR would be 1.6 million. For Meritain would be 2.3 million.
All right. Annual administrative costs. Blue, 2.9. UMR, 1.6. And Meritain, 2.3?
Yes.
Okay. Do we have any other questions? All right. Committee members, at this time, I think it's appropriate. I don't think it's appropriate. I mean, at this time, we're going to need to make a motion, at least to open it to public comment. I'm going to go out on a limb before I call for a motion, if you allow me to ask a couple of questions of the superintendent. Mr. Touchette, whenever you guys met, and I don't mind if Gallagher answers this as well, but I want your perspective. When you guys met for the finalist interview with the top 3, what was your takeaway? Because if we strictly look at numbers and we take emotions out of it, I mean, it's right in our face. But what was your takeaway from the interview process with the top 3 regarding the ability to accomplish our goals? Not their, ongoing goals, but our goals.
Let me first of all say that, again, I was hopeful that every one of those 3 came in and they were just like trying to sell you a car. You go get a car, you want somebody to do whatever they have to do. And I can tell you, I was very disappointed when the Blues came in and some of the questions that they just weren't clear about and how they just thought that they got the job and let's just let it go. But more importantly, when they started saying that they give grant money back, and a question I had was, what do you mean that you give grant money? Well, they were taking some of our money and throwing it out to people in the district. They may give money to United from our money. They would take money at different places. And that to me is something that I'm going to tell you, everyone needs to know that those same people that I just said, United and all that, we do things here in our district that we send money to them. Y'all remember all that when y'all used to do, all of these things, and we would send money to United or whatever it may be. But the same thing is that they were taking some of those monies that we were making and they were sending to all those different things. So I'll go back to this is that, look, we need to make sure that whatever we do as far as this TPA, we got to make sure it's someone that is taking care of us. You need to make sure they take care of our retirees and the actives. And I'll just say that it comes down to, I'm going to go back is, you can't just have something that they're going to give you one time. Where can we get more money out when it comes down to claims? We got to because we're going to have claims every year. You're going to have claims. I mean, you can't avoid that. It's going to happen. But where can we get more saves as far as the claims are concerned? So again, this committee needs to make a decide as far as what we're gonna do. But when I'm gonna say that if we gotta start taking more money out of your money, we're gonna have some issues with teachers, and we're gonna have some issues with other people that we're just taking money away again and saying, hey, not only that, but we're gonna take care of your plan and make sure we increase it from 80-20 to 70-30, and all of that's gonna take place. So, guys, we're gonna take whatever you guys want us to do as far as moving forward. We're gonna make sure that we do what we can to make the right decision as far as what we're gonna do as far as to the board is concerned.
So I guess what I'd like to recommend, and it's gonna be up to you two guys as committee members to what motion you wanna make, but I think what I recommend is, I'm really hopeful that we can get a workshop scheduled for both retirees, actives, all the above. And something that can be transparent and informative. And so there's gonna still be a lot of questions. I have my mind wrapped around it for the most part, but I'm just one person. So I don't wanna see us make a recommendation of these three companies today, if we can help it. I would recommend that. Oh, okay, we got another question. Oh, that's the answer to the question. MD Anderson has been confirmed as being in network with both Meritain and UHC. I think that we should, we can certainly make a recommendation today. If we go on feelings and if we go on the past, we know what our recommendation is. If we go strictly on numbers, we know what our recommendation is. If we go somewhere in the middle, we know what our recommendation is. But I'd like to allow a workshop to pass us before making any kind of recommendation. So what I would ask and entertain is a motion to schedule a workshop and allow the superintendent to make a recommendation to the full board at our June 12th board meeting.
All right. So yeah, I'll take you up on that offer. So I would like to make a motion that we allow the superintendent to get feedback from workshop, board members get feedback from the workshop, and then the superintendent come to the board with a recommendation. And just to be clear, I want an actual solution in that recommendation, not defer back to the board to sit here and 9 individuals argue. So yeah, so like that's my motion.
I second that, Mr. Bergeron.
Madam Secretary, were you able to get all that? I'm sorry, yes? Okay, great. So when will it come up? Let me see here. Is it going to come up on my screen? Yep. The motion that the Insurance Finance Committee schedule a workshop and allow the superintendent to make a recommendation to the full board at our June 12, 2025 meeting. We got a motion and a second. At this time, I'd like to call for public comment. The motion is to schedule a workshop and to allow the superintendent to make our recommendation. If there are comments regarding the presentation today, we'll allow them, but it's public comment, no questions. We've had time for questions, and it sounds like we'll have time for plenty more questions at an upcoming workshop. So at this time, I'd like to open it up for public comment. If you would, tell us your name, tell us who you are, and speak clearly into the microphone. Thank you.
Daphne Vilmoret. I'm not sure I'm coming across. I'm a retiree, and I want to thank you for the opportunity to set a workshop. I think that is an excellent idea for getting more information out there. As much as we've tried to get people interested, coming to get actual information, and even to the point of recommending that employees and retirees watch YouTube so they can see what's going on. I think the workshop is going to be a great way for them to get actual information, get questions answered, get a lot of information that probably they're not going to have just from seeing this. So thank you.
So our committee meetings are structured such that we follow a strict guideline, policy, and rules. And so I agree with you. I think a workshop is going to allow us to be a lot more flexible on that. Please.
Thank you. I'm Katie Landry, a retiree. I too support the idea of a workshop. I think it's a great idea, hopefully much more informal where we can exchange ideas, okay? And the one thing, admittedly, may be time for a change. If so, the only thing I would like to caution is that we don't lock ourselves into something like 3 years if the TPA does not pay claims. We can't wait 3 years, and I'm fine. I'm only asking that we make sure that we have that safeguard in there. But thank you for the workshop. I think it's a great idea.
My name is Anna Dean Crater. I'm also a retiree from Lafayette Parish School System. I love the idea of a workshop. I wish and I hope that you also invite some representatives from each of the 3 companies that we are trying to obtain so that we can hear what they have to say. We don't always hear everything. So I would strongly encourage that we get representatives from all 3 of those companies for us to really hear what's going to be presented to us. We want you to save money, but we know we have more employees, and we know every year there is going to be an increase. So we're just going to have to budget for the increase every year. It's going to happen. But we want to save you money too. But we also want good health care. We don't want poor health care. We don't want to be turned aside or made to wait for anything. Listen, none of us would like to be in this meeting this afternoon. We need to trust y'all, and we need to trust that you're looking out for people. We are people. We're not a building. We're not a facility. We are people with human needs, and it's a basic and a very important need for all of us. We have given all we had to the school system. Now we are old. Please don't discard us. Thank you.
Mr. Hidalgo, first of all, thank you, and we'll take care of it. Thank you.
I too appreciate the workshop, but I would be remiss if I did not say, with all due respect, the RFQ process in which Gallagher was selected was supposed to have been a decision made by the Board Employee Insurance Committee. At the last minute, that decision was given to the superintendent, and the superintendent made the recommendation. My preference would be that the decision is made by the elected officials to the superintendent, rather than the superintendent being put in the position of making the recommendation to the board. Thank you.
I don't know how to address that. I mean, the superintendent's not going to make the decision. This is a mechanism in order for us to not make a recommendation today and have a workshop. We make a recommendation today and we all agree on a recommendation. That's the recommendation going to the board, despite the outcome of a workshop. This is a formality that I think is a acceptable workaround, and it gives opportunity for more feedback because we didn't have all of this data prior to it being on the agenda. So, it was, I have to say the last time wasn't a last minute decision. That's what our meetings are for, to decide how we're going to move forward on topics. And we made a decision twice now to allow the superintendent to make that recommendation. The superintendent's recommendation is only a recommendation. If I were not the chairman, or if I handed the gavel over, I don't know what motion I would make today. I think that there needs to be more time. So I'm not ready to make a decision. I would vote up or down if there were a motion, but I think that this is a fair workaround, and I want you to know that we're honestly trying to make this process as flawless as possible. And I hope that in the end, that's the outcome.
I just want to say that I appreciate the change in tone of the meetings that we've been having the last couple of meetings, as opposed to the ones we were having last year. A big change, and I appreciate it.
we have any other public comment on this final motion? Hearing none. Committee members, as well as Mr. Lejeune, do you have any follow-ups, any questions, any comments?
I'll start this off. All right, so I'm going to preface this by saying, like, my mother-in-law is a retiree from LPSS, and like we have to make sure we get this decision right because Thanksgiving's going to be pretty awkward when we have a discussion about healthcare at the Thanksgiving table. So that's got us, I'm looking forward. Mr. Down, thank you for bringing up the workshop. I think it's a good idea to get everyone in the room and talk about the options we have. I also want to say that I want to make sure that we do not put a recommendation out today because I still have questions about the provider services, the disruption, what that's going to look like. We need to have some deeper conversations because I feel like I know where I want to go with it, and I know that there's going to potentially be some changes, and I want to make sure we get feedback because I'm not on the healthcare plan, so I don't know what disruptions is not going to affect me, but I know it's going to affect a lot of my constituents. I just want to make sure that we have a full game plan and have thought this out to the best of our ability by the time we bring it to the full board, and that we give the full board all the information to have them make a good decision.
Mr. Hidalgo, I just want to say thank you for having discernment that a workshop is needed. Because at the end of the day, we need all our retirees and even our actives to really understand what's going on moving forward. Because what's moving forward is not only going to deal with them on a medical basis, but also a financial basis. So I want to make sure that our actives and our retirees completely understand what's going on moving forward. So thank you for bringing up the workshop.
All right. All right, good. So we're looking at a tentative date. We will get that out as soon as possible. We'll coordinate with staff and try to find a date and time where we have ample time to make that happen. It's probably going to be early next week because, we got to do it before Thursday. So hopefully we can accommodate everyone. And I'm pretty sure it'll be televised because we're going to have to announce it as a public meeting. It's just going to be more of an informal public meeting. We do need a vote, yeah. That's okay. He ain't leaving. Okay, at this time, with hearing no other comments or questions or concerns, I'd like to call for the vote, please.
Mr. Hidalgo?
Yes.
Mr. Edmond? Yes. Mr. Bergeron?
Yes.
3-4, none against.
All right, with that said, that's the last item on our agenda. This meeting is adjourned.